Get them up here. Where'd my screen go? Okay. All right. Okay. Well, if you guys are ready, let's go and kick off. I want to thank everybody for joining us today here at 10 Capital. Let me get my screen up here and we'll kick off and go through the introductions as well. We'll have four companies presenting. We have quite a few investors in the room. I'd like to have a few of them introduce themselves. We may not go to everybody, but just to know some new faces that we see here as well. But with that, let's go and get into it. For those who are new to 10 Capital, we help startups and investors connect for funding. And we have been doing this since 2009. We were originally called Texas Entrepreneurs Network. We help startups and investors connect for funding, and we coach the startups on their fundraise strategy, and we help investors with their diligence process. We use a lot of AI tools to help analyze deals, and we work both sides of that. We basically help with fundraise preparation for the startup, coach on the engagement, help make introductions, do follow-up mailers, and help close. In short, we provide the legwork, saving time and money. We work with, our network includes high net worth individuals, family offices, VC funds, and angel groups and individual angel members. We work with most of these groups in helping them form capital for their early stage investment ecosystems. In short, for example, we help high net worth start family offices. We help VC funds find limited partners primarily through family offices and high net worth. And we also help angel groups find members because that's how they fund their program. There's a few logos at the bottom of the groups we've helped in the past, and we know quite a few investors in the community as well. This is the 10 Capital team. We recently added Mustafa Shahad from Egypt into our program. For those who haven't caught up with us recently, we now have expanded into the Middle East, North Africa, and Europe. And we now have over 450 investors in our network through Mustafa's outreach and marketing. And with that, we have a great team that continues to grow and we continue to expand our footprint. We also have started a Substack newsletter called 10 Capital Connect. It uses a lot of AI tools and shows investors how to use AI tools for analyzing deals, screening deals, and diligencing them. Take a picture of that QR code. You're welcome to get a free subscription to it, and you get a lot of actionable information from it as well. So with that, let's go ahead and meet some of our investors. I'd like to have them just do a quick introduction. We have too many here to go through everybody, but just like to maybe have one or two tell us a little bit about themselves. Let's start with John Kim. John, can you tell us a little bit about yourself?
Hey guys, so this is John. I'm one of the partners here at Affiliate Capital. I've been with Affiliate for about 15 years. We do med tech, med device, health IT, lots of stuff. We have a couple of funds. One of our funds is geared towards home health. Another one of our funds is more geared towards cardiovascular and brain health. Our check sizes are typically like 500,000 to like 4 million per round. I'm a clinician, so I get to see a lot of companies and screen through a lot. But I bring a lot of the clinical aspects to our due diligence. Nice to meet you guys.
Great. Thanks for that. Patrick O'Neill, can you tell us about your work?
Sure thing. Hello, everybody. My name is Patrick O'Neill. I am with Naventus Health Capital. Myself and my partner, we invest again in US-based devices, digital health diagnostics. I've gone through any number of high-value programs such as MedTech Innovator, Life Science Angels, etc. And we are currently raising our first fund.
Great. And Arlen Myers, can you tell us about your network and your fund?
Sure. Thanks for having me. I'm Arlen Myers. I'm a head and neck surgeon by training. I now am the president and CEO of the Society of Physician Entrepreneurs, which is an international biomedical and clinical innovation and entrepreneurship ecosystem. I'm an advisor to Accelerant Ventures and to an organization called Promptus Ventures.
And finally, Javier Fernandez, can you tell us about yourself and your fund?
Hi, I'm one of the two partners here at Innoventus Capital. We are based in Spain, in the southeast. We run a early stage fund, agnostic, but we have quite a heavy lean towards health. Especially, we're very related to the Universidad Católica de Murcia, which is a very strong university in our area. We also have a business angel club with two sites, one in Murcia and another one in Alicante. And in both cases, we are focused on early stage investment.
Great. Thank you for that. Apologize for the rest of the investors, but we do need to get into the presentations to stay on time and
Thank you.
hope to catch up with the rest of you guys together. Thanks, Javier, for that. And with that, so let's bring up our first presenter. We have Chill Shark. Each company gets 10 minutes to pitch. We'll time it, and then we'll have 10 minutes of Q&A. So with that, go ahead, and, Keegan, if we see your slides, go ahead and kick off when you're ready.
All right, can you hear me?
Yes, just speak up a little bit louder and it should be good to go.
Okay. Well, hello everyone. My name is Keegan O'Connor. I am co-founder and CEO of Chill Shark. And on the line, we also have Venkat, if you want to introduce yourself.
Of course, I forgot to unmute myself, but I'm Venkat Malela. I'm the Chief Operating Officer of Chill Shark. I've been with the company for about 6 months now.
Awesome. So first, I just want to start by showing you guys the product. We invented a product that turns any bathtub into a cold plunge. And the way that it works is essentially it can attach to any bathtub. It pulls the water out, runs it through the system, drops it back in at a colder temperature. The reason why I started this business was because I wanted this specific product, and I bought a couple different units, and they didn't do what their market is doing, so that was what spurred it. And last week, we actually just had our first unit delivered to the Four Seasons in Philadelphia. That is a picture of the Chill Shark in the presidential suite. They had a VIP guest who started using it. So now every single time a VIP guest comes through Four Seasons Philadelphia and they want an ice bath, they'll be able to utilize a Chill Shark in their suite. So the product itself, there's a lot of different applications. We originally, thought that consumer was going to be our core focus, but then quickly realized that luxury hospitality was where we really solved a massive problem that we were uniquely positioned to address. So, since we started, we got $750,000 paid orders. We just booked our first revenue last week. We have a 2-year contract signed with Four Seasons. We've closed a number of different NBA teams, MLB, etc. And now we are raising $1.5 million to really scale up our manufacturing and start to, really grow the business. So I think where I want to start is just talk about the problem we're solving, why we're positioned uniquely to do this in the market, and then ultimately, our plan and vision for the growth of the company and how you ultimately get a return on your money. So very easy way to understand the problem. Just right here, this is how they're currently doing it. They are bringing ice up to the room, and then when you think about this on a larger scale, when teams come through, they have to do the same thing, and it's just an operational headache. They can now use the Chill Shark and offer it as a service to generate cash flow. So we turn a headache into a cash generating asset. When you look at the market specifically within, luxury hospitality and luxury real estate development, wellness is the focus for product differentiation as well as, property differentiation. When they try to integrate cold plunging, they do not have the space for a traditional cold plunge. And, we solve that problem. But when you look at, the way that they would have to, their current products that they would have to utilize, it would be, the consumer version, which really, you're not going to put an inflatable tub in a luxury hotel. And the chillers are typically just these bulky chillers that are designed typically for like a fish tank chiller. And then on the other side, if you're looking to install, a cold plunge in an outfit, it can cost upwards of $80,000 to $100,000 to retrofit. So the problem that we're solving, there already is demand and there already is a process. We're providing them with a better solution to their process. And something that actually fits into the environment. So, we have a companion app where we integrate with Whoop, Apple Health, and Garmin, but really for the hotels, they're going to be using it, utilizing it for fleet management. But basically, our core differentiation is ultimately in our design, the way that we're able to retrofit additional tubs, and then ultimately providing that premium connected experience. The way that they set it up, ultimately, all they have to do is fill up the tub, lay over the flexible mat. They can pre-schedule on the phone or do it directly on the unit. And it was all designed to make this as frictionless as possible. When you look at why hotels buy, where if you're buying a cold plunge, you are going to be married to that specific provider when it comes to service. So if the cold plunge breaks, you got to call out, say Kohler or the plunges of the world, and then they have to actually send somebody out to fix it. With the Chill Shark, they're going to have zero downtime because they can have extra units on site, and then if something breaks, we can remotely diagnose it, or we can ship them a unit next day because zero downtime is very important to them. Now, as I said before, traction-wise, I think the traction speaks for itself. There is a broader consumer demand. We proved that in running a Kickstarter, but ultimately we see, we have to be laser focused on executing our B2B strategy that ultimately is going to allow us to access the consumer, in a more cost-effective way. So we started building this, with the University of Texas basketball athletic trainer for on the road and hotels, close some professional sports teams, and then they asked us to sell these to the hotels and have them offer as a service. And that's when we really started talking to hotels and realized there was a major market opportunity. And the reason why we're focused so much on, hospitality is ultimately because of demand, and it pulls us into a lot of these residential projects. So this is a case study of a 18-unit property in Nashville. So the developer, he's done research that indicates he can increase his property value 30 to 40% by adding a cold plunge and sauna in every room, and that's the way that he's differentiating his asset class. And so a lot of these, there are a lot of these opportunities in the pipeline that ultimately we get our foot in the door by being in these luxury hotels first. So by being in the luxury hotels, we have a demo showroom in every major market. We get pulled into those branded residential projects and get introduced to a lot of those designers. And then this sets us up to be, in front of all the athletes and athletic trainers. And ultimately, when we're ready, we'll be able to access that premium consumer in a different way. When you look at the business model itself, it's a combination of hardware plus recurring. We conservatively capped it around 25% by year 5 for the recurring, but it's a mix of consumables. You have those filters, and then obviously the fleet management, and then some rev share as well with the hotels. Now, when in our model, we priced it around $5,000 for the average selling price. We're retailing around $6,500. COGS wise, you look at around $2,100 landed currently with a 10% cost reduction year over year. So by year 5, conservatively we expect to be around 42-43%. But when you look at the scale of this business, the comp here is the Plunge Company. They went from 0 to $100 million in sales in 3 years with no capital raised, and they were just selling a bathtub. So they were selling something to everyone that they already owned. So we believe, that we expect similar growth, but when we look at forecasting, we wanted to be err on the conservative side. So by year 5, we expect to be around $139 million. When you look at the TAM, what's important to note is to hit our numbers, we only need to sell 50,000 units over a 5-year period. So when you think about the TAM, you can look at the 60,000 luxury hotels, residences. You have ultimately professional sports teams and the premium consumer. So we believe that there is a very it's a very clear path to executing within this market. Now, competition-wise, the reason why I started this company was because I bought these products and they didn't work. Nuvio, it took 10 hours to chill like 20 gallons of water, which is never going to work. And then the other one is just like a 103-pound chiller that's super loud. And so we built the first product that's designed to fit into that luxury environment, and it's lightweight and it's sound virtually quiet. So, how is this protected? It's not just the IP. We have the utility to design IP, the trade dress, but ultimately what we believe is it's the combination of distribution plus the IP plus the data collection aggregation is what really is a core differentiation for us, along with the team. And so I've had a number of different businesses in my life, but I think the biggest thing to point out here is Venkat joining. So Venkat joined 6 months ago. He was at the world's largest hot tub, cold plunge, and sauna manufacturer in the world. He had been scaling hot tubs, cold plunge, and saunas across 80 countries, hundreds of thousands of units. And we actually met when he was doing diligence on their corporate venture fund. So he has scaled this type of product, across the world. And ultimately, this, having him on board, it should be a signal in credibility from an investment standpoint, but also, from an execution risk standpoint, he's done it before. So when you look at the exits, and Venkat can answer more questions about this, but he was on the corporate venture team at these large strategics, went through the acquisitions. So we have a unique insight into how they think, what they're willing to spend, what they, when they have the build versus buy decisions. He's been there. So we put this together based off of his experience. So I think the most important thing to note here.
We started getting some questions in the chat, by the way. Do you want to jump to the ask?
Yeah, he might be having some connection issues.
He's muted.
Keegan, you're muted. Yeah.
Oh,
Hey, I'm sorry. I'm having some issues here. Let me just share the ask, and Venkat, if you can.
yeah.
Yeah, I can answer any questions which come up.
Yeah, please. Go ahead. Yeah, we have a 10 minutes Q&A. Yeah, so go ahead, please.
Yeah.
You can start. Yeah.
Yeah. So this is the ask. So we are raising $1.5 million on a safe note, and this just shows the use of funds. We primarily want to scale, finish up our certification, the initial production deployments, also setting up our hypercare for the field service based on the distribution channel we are in. So we need the hypercare model set up, and essentially just fulfilling the demand which is already there. We have a pipeline which we have to basically fulfill. So that's really what the use of funds is for.
Can you go back to the differentiation slide again? Someone wants to see it. Maybe we can start to the 10 minutes Q&A. I think that's much better. So now time for the Q&A. So please unmute yourself. Just go and ask questions. We have 10 minutes for that.
Yep.
So I'd like to start. If sorry, you listed the list price as I believe $5,000, and the luxury apartment install, there was 18 units, and the average, I did some quick math, it looked like it was about $14,000. Did I do that math right? I was wondering what the differentiator was there.
I can explain that. That included the saunas also, because we were asked to provide the 18 saunas also, which comes in with that. So we are also coordinating that. So that went into the actual revenue for us. But the price is 6,500 is the retail. We use in a financial model, we use a blended price of 5,000 because we do have some discounting in certain cases. One thing which Keegan did not get a chance to talk about is the Four Seasons. We have a signed contract where they give us a revenue share, where they deploy this as a unit in rooms, and they give us 25% of the revenue generated from each unit, and that entails a service which we provide and a discounted unit price at 3,500.
How much
Thank
does
you.
Four Season charge per use?
It's quite a lot, actually. It's almost 1,000 to 1,500 per session. Their estimate, which is coming from their basically corporate, is they expect about $100,000 in revenue per unit per year.
Why don't you become the service?
Well, we are providing the service in terms of you know, basically maintaining it, the fleet management, collecting data, point of sale data. Uh, but well, they have the brand, they have the actual rooms and the clients where they deploy it.
That
So we
sounds like
are
you'll make
essentially,
more money on the service if this turned into a service rather than the actual
yes, we do
hardware.
have it in our model where we talk about a lease and a rental, which we go there, but that is very capital intensive to start with. But that's in our next stage, which we have accounted for. All right.
Yeah, why did Four Seasons choose Philadelphia of all the properties they could have chosen?
I know Keegan is not there, but I'm not exactly
There's,
sure why
can you hear
Philadelphia.
me?
Oh yeah, can you talk about why Philadelphia? I think I know the answer, but you can probably
Yeah,
say it better.
sorry. Yeah, is there definitely come through there? A huge
No,
on the
you're cutting out,
other
Keegan. Yeah.
We can't hear you.
Yeah, your
Yeah, I
connection
can
is
I
not.
can I can talk about it a little bit. So because we started with the athletic teams and they were the ones who pointed us towards the Philadelphia Four Seasons Philadelphia, the connection actually happened through the national hockey team trainer, the US, and Four Seasons Philadelphia has 73 different sports teams staying there every year. So this was essentially as provided as a solution to these sports teams, but then it also is there for the wellness clients, very high value clients like the one which we know who he is, but we can't actually talk about their identity. But but it started with the sports teams, and Philadelphia has 73 teams staying there, and it's a big market for them.
We have two hands raised. We have Ji Lee. Please unmute yourself and go.
Hi, Keegan. Thanks for the presentation. Just trying to understand the economics a little bit. So how many units did for the Four Seasons order from you guys?
So the first contract which we have, they've ordered like 5 units. So this
Okay,
is supposed to be the Four Seasons Philadelphia location is basically a pilot, and then from there on, it will move on to other Four Seasons locations.
got you. Thank you, Venkat, sorry. And you mentioned that it's a revenue sharing model, so you don't receive anything upfront until somebody orders the room service. Is that right?
No, it's a combination. We do get paid for the units upfront, which is
Mm-hmm.
yeah, and then the revenue share gets reconciled every year or every quarter. So we basically get their point of sale data, and then the revenue share gets reconciled. So we do have a signed contract with them. There are some other details in there. There's a minimum floor which they have to meet for the revenue, which
Yep.
is for that we provide the service, we provide this premium service. This clientele requires a white glove service, and that's actually part of our hypercare and a model which we are setting up, which we get to charge for, and also that builds a moat for us.
Understood. Just very quickly, because other people probably have a lot of questions too. So, how long do these units last that you anticipate?
So these units, I mean, they can last up to 5 6 years. So it is built to be serviced. We do provide, we don't have it written down exactly yet, but we do provide a 2-year warranty.
Okay.
But these are modular units. So there are consumables in there. For example, this filtration, this sanitization in there, these are all consumables based on usage, and it's very easily user replaceable. So all that is also part of the service. But yeah, these are not something which is just going to break down. These are premium level units.
Sure. Now, this question is if it's too hard to or too long, it takes too long to explain, you can text in the chat. Basically, what does it take for somebody else to build something similar to what you do? And obviously, you have the first mover advantage, but just trying to understand a bit more. Thank you.
Yeah, so I'll explain it very quickly. So there is an engineering challenge. The engineering challenge is very, very simple. In a simple way, it's combining this chill speed in a very small package, which we have done. And we have patents around it, the modularity, how it is set up. It'll be, I can't, it's too much to explain here, but that's from an engineering design standpoint. Can somebody do it, get around it? There are a couple of competitors which we pointed out, but they can't exactly have the same form factor, the sound, and that experience, the weight, because the portability is a factor. But for someone to get the same distribution, the same relationships, building that service model, and I came from an industry like this. I was at Watkins Wellness, part of Masco Corporation, 50-year-old company. They build hot tubs, cold plunges, saunas. I was the vice president of engineering and manufacturing there. We used to sell to specialty retail, and that's exactly how we built that. Basically, building this service model, building that support structure, and innovating with products. But it's not just the product; it's the distribution and the service and the customer support. It's the entire customer experience.
I might need to interrupt here because we're running out of time. The last questions is coming from Dan, and then I'll make introductions to very much everybody who asked questions to you. I'll make an introduction by email so you can guys continue chatting offline. So the last questions is coming from Dan. Dan, please ask your question.
Super. I'll keep it short. You mentioned that this is a pilot, which I really appreciate. But when I look at it, this is an electronic device, and you've also mentioned one other thing. You're looking for certification from UL-ETL, which makes total sense. And then you also mentioned sanitation, which again is another whole series of approvals. And so the question is, since this is a pilot, and I assume the certifications are in process, still have to go through, what are you doing to protect yourself? Because there's obviously, this is electricity and water, and there are some considerations there.
Yeah, I mean, it's nothing out of the ordinary. It's like, having a hair dryer or a refrigerator. So part of the certification is the sanitation. It goes through. There is a very specific. I forgot the exact code number right now, but there's a very specific UL code, and it's harmonized across. We are getting European, Canadian certifications also.
Mhm.
So it takes into account electricity, basically the EMI, for example, electromagnetic interference. It takes into account sanitation, general safety. We're going through all that. We have to follow through with all the entire process in the bill of materials.
So
So
is that part of your use of funds, or that's already
yes,
underway and
no, it's
allocated?
it's underway, but yeah, it is there are some more final testing, the audits of the factory. So it is part of the use of funds, but the initial processes, we've done all the pre-compliance work that's already done. This is a scalable product.
Right.
This is not an R&D design. This is a
An
scalable product.
anticipated completion date for the certifications?
So we've started it a little bit. So it's give or take about 3 months, a few weeks here or there. So we should be ready fairly soon. We have to deploy some units at Roca, and Keegan was talking about that. This is in the Barcelona. Roca is a large Spanish company. Used to be a customer of mine, a $2 billion, 100-year-old company. So they have invited us to be a demo startup partner at their Health Innovation Hub in Barcelona. We're going to demo starting in November for 3 months. We'll be
Super.
exposed to all their clients, developers, architects from all over the world, about 22 different countries. So
Great. Thank you.
we are doing that.
So that's the end of our time. So Jafir actually asked questions about the competition in sales and marketing. I think that I'll make an introduction for both of you by email so that you can answer that by email by writing, and where maybe you can schedule time. Then I'll move on to the next presenter. We have Skymare.
Hello, hi. Sorry, can you hear me?
Yeah, we hear you. We see you. You're good to go.
Okay, very good. So, sorry, I was a little bit late, but how long do I have?
You've got 10 minutes starting from now.
Okay, got it. Okay.
Yeah.
All right, let me share my screen then. Very quick. Okay. Hold on. Can you see my screen?
Yeah.
We see your screen. Yes, you're good to go.
Very good. Okay, so my name is Eric Zhou. I'm the co-founder and CEO of Skymere. So let me go through my presentation. Skymere is a IoT innovator, and I'm going to talk about the problems, but we are trying to solve most fundamental issues in recent wireless communication and IoT industry. So I can just move on. One thing I'd like to emphasize, we have a very unique technology that can improve performance significantly in all wireless communication network. And it was already tested, proven by the big customers, including T-Mobile, Verizon, and other guys. I'm going to talk about it a little bit later. So we have now global customers, the big guys, including T-Mobile, Verizon, Geo, GE Healthcare, Primex, and all others. Right now, we are looking for rapid revenue growth. We started receiving a lot of purchase orders since last month. We received more than 10 purchase orders so far. We are expecting, revenue up to $800,000 this year. Sooner or later, we believe our revenue will grow rapidly. So we are targeting about $40 million in year 2029, and I personally believe we can reach up to $80 million in year 2030, where I can expect some exit event for all the investors. So let me move on. Our market is very big, but it's also growing rapidly. For example, 5G subscribers are increasing, dramatically, and fixed wireless access FWA, connection is now increased more than 15% per year at this moment. So there's more than 40 billion IoT connections, by year 2030. Those are all our target market, and market is really growing fast. So then what is the problem in the wireless communication now? I live in Florida. We have Florida Corporation. In Florida, if you go to their government, Florida government site, there are more than 100,000 sites where people have internet connectivity at this moment. In United States, internet sucks. It doesn't work well. One of the primary reasons is, if you look at this is a very traditional link budget calculation. There are 5 terms. 2 out of 5 are related to antennas. That means no matter what kinds of network environment or infrastructure you invest, if you don't have any good antennas, it just don't work. It doesn't work. People just don't realize it until now. And so that, they just ignored a bunch of, the antenna portion. They focused on hardware, software, AI, and all the services, but they didn't focus on antennas yet. So let me move on. So for information, I used to be a CEO in an antenna company before. My former company shipped more than 100 million antennas for global top-tier customers, including Samsung, Huawei, GTE, Intel, or whatever. I was a senior VP or executive VP in my former company. It was another big European antenna or RF IoT companies. So I spent more than 25 years in this industry. And after spending that time, I realized that, okay, there's a way to improve antenna performance or RF performance significantly. And I invented this technology by myself. It is called MOLCAT. We filed a patent, and so far patents were issued. It was very good news for us. First patent was issued last year, and second patent was issued just yesterday. So we have very strong patent protection now. By the way, we filed far more than 10 patents, and they are being now issued. Then why we are good? So we have very unique technology called MOLCAT. MOLCAT can improve antenna performance twice in the exactly same form factor. Also, Skymer, my company, is the world first company who designed a high-level system using antenna-first methodology. Meaning, I can go back. Normally, what other people do is, they start, developing something from concept design. They design housing, and they do PCB design, and they install all the software. At the last moment, they install the antennas. So in that time, at the time, it's very hard to improve any antenna performance. We are using completely opposite way. We designed antennas first, And we designed housing and circuit board to maximize the RF performance or antenna performance. Here's the result. Okay, so therefore, we have three different major product category. First categories are all high performing antenna. Second category is 5G router or wireless router. You can call it CPE or wireless router. And third one is tracker. I'm going to talk about this router because this is our featured product at this moment. And it was released in the market early this year. And we got a lot of market recognition until now. For example, early this year in January, we received the CES Innovation Award. After that, we were recognized as one of the top 10 leading wireless tech company. We received another award from Pinnacle Award. So we received the Platinum Award. And also the first mode identified us as a vendor to watch for this year. So this device is about making wireless connectivity, meaning, whenever you travel, for example, you are connecting your internet through your home router, probably Wi-Fi router, and your router may be connected through fiber optic cables. But what if there's no fiber optic cables? And you need this kind of product. This product uses complete wireless connectivity. It receives signal from base station far away and generate local Wi-Fi network. That means you can take this and travel there wherever, just set it there, and it'll generate local Wi-Fi wherever you travel. And amazingly, it can generate, very fast internet download and upload speed. Right now I'm sitting in my home, but I measure more than 400 megabps download speed, which is about same speed as fiber optic cable. Our product can provide far longer or wider coverage area than any other product in the field. For your information, this product was already certified by T-Mobile and T-Satellite, and we are getting next certification from Verizon. We just having regular meeting with them, and it will be certified soon in, I would say, 1 month, within 1 month. So we will get certification from. We already have a certification from T-Mobile, but we got the certification from Verizon and AT&T shortly. This product is already available in Amazon and Walmart, and we have pretty good reputation or review already. And more than that, we recently developed further, so our product can support Starlink satellite communication too. Meaning, whenever you travel, imagine you are in the parking lot in some RV parking lot or basically nowhere. You can take out a product and put it down, and if you have Starlink satellite communication device, you can actually hook it up to our device, and it will generate internet wherever you travel. If there's no Starlink communication, then it will connect. It makes a connection through the terrestrial network, including like T-Mobile, Verizon, AT&T. That means this is very unique, or one of the first product that have this kind of capability. More than that,
I'm sorry, I might need to interrupt, but we need to jump to the ask.
Sure. Okay. So let's call we have a global customers include, again, this is the last page. A lot of customers, you can just name it. And as I said, we are receiving a lot of attention. We are signing up a lot of contract, and we are receiving new purchase orders. And we have, every day we receive new inquiries from a lot of customers. Okay. Any question from anyone? So last page, actually, I'm going to talk about this fundraising. We closed the Series A fund in December 2024. We raised about $7.3 million. We are looking for raising additional $5 million with exactly same condition as before. We already received some commitment from existing investors up to a few $1 million. So we are trying to fill the gap, to meet this $5 million funding goal at this moment. Okay.
All right, wonderful, cool. So now to the time for the questions. Who would like to start? Please unmute yourself and just jump into it.
This is Per Norling from Europe, Sweden. is this device, could you use this device in Europe as well?
Oh, absolutely. This device is designed to support entire world. In fact, we are talking to some Asian service providers and African service providers. Only reason we don't have the business there is because, again, each country require different certification process. So we decide to select the US as a starting point, but sooner or later we will expand to other geographical areas.
Yeah, and the second question, and the last question, your ideal customer profile, who is that and how do you reach them? Is it primarily through partner sales?
Sorry, could you repeat your question again? I'm sorry.
Who is your ideal customer profile? Who do you want to have as a customer? That is the first question. How do you reach this customer? Is it through indirect sales or direct sales? So how do you want to make it? Yeah.
Very good question. I can give you some example. In terms of T-Mobile usually do not buy these kinds of hardware directly because their services are basically selling SIM card and services, right? So instead, they actually introduce their channel partners, big company like DNH, one of the largest company, and we signed a contract with them, and we started shipping our product through DNH. They actually released the first purchase order for about $200,000 amount just a month ago. So our sales channel is going to be distribution channels. Also, some either T-Mobile sales people wants to sell our product to their client. So there could be some, we are working with, several end customers. So it's more like a direct sales, So we are selling our product through distributor channels. Also, we are selling our product through to the direct customers. The customers are like, small and medium, a business or companies like, for example, restaurant franchise who wants to provide better internet connectivity. Some companies have a big factory where they have some internet connectivity issue, something like that.
Thank you.
Okay.
And who's else? Julia?
Yeah, hi. Thanks for the presentation. I just one question. The 5 million extension which you are now raising, was that kind of planned already 18 months ago when you raised the Series A, or how did this come about, this extension?
So we closed $7.3 million about 18 months ago, and the plan was to actually develop product and penetrate the market using the fund, and we are actually faster than our plan. Now we are at the already commercialization stage, and we started selling our product, and our customer wanted us to scale up. So that's why we had discussion with our investors, and they agreed. So we for quick fundraise, that's why we decided to extend this Series A with the same condition. To answer your question, yes, the lead investor is a Solico Capital in the US, and they agreed to execute their additional warrant or fund, about few $1 million. And there's another investor who already made commitment to invest us verbally. So, I don't think we have a big issue to raise $5 million, but again, we are still looking for the possibility or other investors who can invest us up to 5 million. We are planning to go for Series B probably in 2 years when we really scale up with large scale, and I'm pretty sure company valuation will be far higher than now at the time.
Okay, thanks.
All right, we have questions from Dan, and that's probably going to be the last questions.
Okay, so I'll keep it short. What are the economics? Because I didn't hear cost of goods. I haven't heard selling price. I haven't heard whether this is being white labeled through Walmart or Amazon. Could you give us a little bit of idea of what's behind the scene on the numbers, please?
Our CP product is being sold with $590 per unit in Amazon. We have a little bit different price tag for strategic customers, so that they can order bigger volume. Our current margin is about 40%. Gross margin is about 40%. So we're also actively looking for, second source to build this product with larger scale. Also, we have other product line other than DCP. We have antenna product, but we are not dealing with small antenna. Our antenna product is high performing, unique product, having price over $100 normally, with very very high margin, gross margin for information. Okay.
Thank you.
All right. So with that, let's just end the presentation. Thank you so much for the presentation. So we move on to the next presenter.
Well,
yeah, Stephen, you want to say something?
right. I have a quick question for Eric now.
Okay, go ahead.
Can you a bit more explain about your team and the size of your team and how do you function? How do you operate?
Sorry, could you repeat your question? You're asking about
Right.
team?
Yeah, your team members. Like how big is your team?
Sure.
Can you give us an insight on that, please? Thanks.
Oh, absolutely. Okay. So let me share my screen real quick so that you see them. So I am the co-founder and CEO of the company. And, I talked about it, but, I used to be a global VP in another big IoT company, Tagulas. So basically I have, I am proud to tell you that I'm probably one of the best antenna or RF, expert in the world. I have a lot of, reputation. If you ask question to some people in the industry, they may know my name already. Another team members are great. First of all, we have like 5 PhDs in our team currently, 3 PhDs in our top management team, including Dr. Chris Morton, having a lot of experience in wireless industry. Kerry Greer, another co-founder, he used to be VP in Global Star, satellite communication company working with Apple at this moment. He was in charge of whole product development. Dr. Natasha is in charge of sales and revenue growth. She was named as a top 50 woman business person in United States by several media before. So a lot of people are actually surprised at how I put these people in the team, and I think I was very lucky to have a good people in the team. Okay.
So with that, well, because we need to watch the time, so thank you so much, Eric, for that. Thank you for the presentation. Now we move on to the next presenter will be Njex. Yeah, when you're ready.
Okay, thank you. All right, so I have a very exciting company, very exciting drug to tell you about. It's the fruit of now 24 years of biology research and over 12 years of drug development. So we have this drug, an antibody-drug conjugate therapy, which is in phase 1 clinical trials. We've dosed 36 patients. The antibody is directed to a protein called TM4SF1, which you've never heard of, but it's the most important protein in cancer. And it enables us to search out tumor cells throughout the body and tumor blood vessels throughout the body. And we can attack them with this therapeutic payload. And so we get to attack 2 parts of the tumor, the blood vessels, which are responsible for the hallmark of cancer called angiogenesis. So in order for tumors to grow, they have to grow new blood vessels. And the tumors are the only place in the body of adults where this is happening. So we can be very selective for tumors. And we also attack cells that are engaged in invasion or metastasis. And that, again, is something that only the tumor cells are doing. And attacking these cells potentially can have a big impact on cancer mortality. So this is preclinical data from mice, and this illustrates what happens when we attack the tumor blood vessels. So we can eliminate the blood vessels within the tumor, but also the large vessels that feed and drain the tumor, and that leads to a mass necrosis in the tumor. And what we found in clinical patients is this exact process occurs, but the necrosis heals by scarring. So we end up replacing the tumor with a scar. Now, in addition, every invasive and metastatic tumor cell expresses our target, and so it's highly expressed across all solid cancers. So we have the potential to, through our tumor cell killing, bring a benefit in every solid cancer. And then finally, there's a third mechanism of action, which is very important. We can dose at very low levels with a very safe dose and just make a mild injury in the tumor vessels without touching any off-tumor vessels. And that causes the immune system to treat the tumor as a wound. And it goes in looking for germs, essentially, as it would in any wound. And it sends in cytotoxic T cells, natural killer cells, antigen-presenting cells. And this immunologically warm surveillance of the tumor potentiates immune checkpoint inhibitors. So the checkpoint inhibitors are drugs that sell $50 billion per year, but they only work in 15% of cancer patients. In mouse models, we can lift the response rates to 70 to 80%. And this is illustrating that that mechanism is working in clinical patients. So this is a patient who would have a 0% response rate to Keytruda. But when we combine the low dose of our drug with Keytruda, then all the tumors start shrinking immediately. So this is on the first scan after 2 doses, every tumor has shrunk between in metabolic activity between 19% and 59%. And then as a monotherapy, we can, the drug also works. So this is illustrating a dose where we only have the vascular killing, not the tumor cell killing. So it's a moderate dose. And this is as a monotherapy. And here you can see on CT scans, we turn the tumor lesion into scarred tissue, so it doesn't shrink. But the metabolic activity goes steadily downward. So this is at baseline. This is after 6 weeks, and this is after 14 weeks and 3 doses. This was after 1 dose. And you can see there's a lot less glucose uptake by the tumor than there was at baseline. And then when we get to higher doses, what happens is that all of the tumor lesions stay exactly the same size as they were at baseline. That's because they get turned into scars, but they just don't grow. And this is after 1 or 2 doses only. And these are being tracked up to as much as 6 months. And so the only way you can have a tumor that doesn't grow for 6 months is if the tumor cells, if it's largely empty of tumor cells. And so we believe once we get back to these dose levels with our PET imaging to demonstrate that the metabolic activity is going to 0, and we'll also have circulating tumor DNA assays to demonstrate that the tumor cell population is going to 0. We think we'll have a very exciting drug. So this is 6 patients. 5 of the 6 had no tumor growth. They had over 20 tumors in a variety of organs and 6 different cancers of origin. So a lot of different, basically all solid tumors, we can have a big impact. And so this is our path to approval. We're still in this dose optimization. We have to find the optimal dose, the ways to assess how effective the drug has been, all the tools of clinical management. And once the oncologists know how to manage the patient, then we can do phase 2 expansions. And in parallel, we can talk to the FDA to plan a registrational trial, do the registrational trial, and then get approval in 2029. So what do investors get out of this? Well, we're currently raising at a valuation between 50 and 100 million. And But upon clinical validation, demonstrating efficacy and safety at the recommended phase 2 dose, which is a place we'll be at in a year, ADC companies with working drugs have been consistently valued north of $1 billion, so more than 10x above where we are today. And at approval, ADC companies have been consistently valued north of $10 billion, so more than 100x higher than we are today. So we have a world-class team, leaders in all their fields. I myself am a former astrophysicist at MIT, Berkeley, and Harvard, four-time entrepreneur, best-selling author of a book on health, and I have a lot of support. Our executive chairman was a senior executive at Amgen and Merck, and then as a venture partner at OrbiMed, served as CEO or chairman of a number of OrbiMed companies. Our manufacturing and quality leaders are the best in the business. They have 7 approved antibody drug conjugates, between them $70 billion of corporate acquisitions. And our chief medical officer led oncology research at one of the Harvard hospitals. Our CFO, founding member of the healthcare banking practice at Goldman Sachs, and 5-time CFO. And our scientific founders made the top discoveries in the field of angiogenesis. The ask, we're raising right now into a convertible note. The note has a 20% discount, 10% interest rate, $100 million valuation cap, which is in line with the $90 million that's been raised into the company through its life. There's also an opportunity, if you're a US investor, to enter via an SPV, which has previously invested $10 million and holds equity. So that's getting in at the equivalent of an $80 million valuation. And the stock is qualified small business stock. And we think it's a very important drug, a very important company, and a huge upside for investors. So in conclusion, this on the side is a picture of my mother. I keep her picture next to my monitor to remind me to work hard. There's people who need us. And they need not only my effort, but they need funding from investors. So I hope you'll join us and be part of this journey. Thank you.
Wonderful. Thank you for the presentation. Now the time for the Q&A. Who would like to start? Dan, would you like to start?
Rather than end. Okay. What's the IP moat?
So we have 12 patent families, and it's very secure because we've been the only people working in the field of TM4SF1 therapeutics. So there was very little prior art, and it's a very different biology, so different design principles than other ADCs. So we think we have an extremely strong patent portfolio. We're preparing to file clinical IP, which will extend the patent life. And we also have a lot of opportunities in orphan designations, which in the US get an extra 7 years of exclusivity. So there's a strong patent protection, and many of the patent claims they apply to methods of enhancing therapeutic margin of any TM4SF1 directed ADC. So we've got very strong protection around our drug, but there's also claims that protect against any competitor. So it'll be difficult for people to compete with us.
Very
10 के
good.
10 कंप्लीट हो गए लास्ट में ज्वाइन हुआ मैं
What are you seeing as to the reimbursement thesis, and where is this going to be placed in that, and how would that affect the acquisition by a strategic?
Yeah, so reimbursement is not generally a problem in oncology if you have a successful drug. So, if you're beating the standard of care and saving lives, then you'll get reimbursement. As far as acquisitions, typically the pharma companies will acquire about a year before approval when there's enough data demonstrating that you'll meet approval. So typically you'll have dosed a lot of patients with clinical quality material, and so they'll know what the outcome is. But in order to get approved, you have to have dosed the majority of the patients with your commercial quality material, and it takes time to create that. So there's a bit of a lag between when everybody knows your drug is going to be approved and when it is approved. And that is a pretty good match for the time it takes to commercialize and do a commercial launch. And so they'll tend to license when they know what that the drug will be approved and can estimate the market. And we've marked that point here, this co-marketing partnership. But there's also a realistic potential to market it ourselves. So there are commercialization CROs like Eversana, and who will commercialize for you in the US and EU. And so you can do regional licenses with partners elsewhere and bring it to market yourself with the help of the CROs in the major markets. And then, you give up the $1 billion upfront payment, but you get a larger fraction of the revenue.
Two more questions, and then we will end the session. And so we have Lini.
Yeah. So you mentioned, has it only been put in 6 patients so far? Is that the phase 1 clinical trial?
36 patients.
36. Okay. And then how many had no tumor growth?
So oh, sorry, I'm going the wrong direction. So at the higher doses, we've been quite consistent. So these are the 6 patients who started above these dose levels, and 5 of the 6 had no lesion growth. This patient started at the right dose level, but then was dose reduced because of a concern about potential adverse events. And this patient had what may be difficult tumor locations in the pancreas and the aorta. So we don't know, but this patient did see lesion growth after the dose reduction. So this is the higher doses, and then at lower doses we get occasional lesion stability, as in this patient. But it's a minority of the patients at this dose level.
Okay, thank you.
Questions from Julia?
Yeah, thanks for the presentation. I was just wondering, you talked a lot about the opportunities. With what risks do you perceive in phases 3 and 4 as main challenges?
I don't see much in later phase. So, the biggest concerns we're facing is, it's a different drug. This vascular mechanism, converting the tumors to scarring, to a scar, a lifeless scar, is a different outcome than just killing tumor cells. Now, it's potentially much more effective, and it may enable people to live normal lifespans, but it makes it harder to assess the result of the drug. So we're putting together these other methods in addition to CT scan, PET imaging, circulating tumor DNA. There's some issues with FDA engagement. How do the regulators want to assess it? So we have to work our way through to, both the oncologists and the patients. They have to know the drug is working and be able to evaluate it. And then the FDA has to be able to assess it. And now the good thing is our drug works in all patients and in all lesions of all patients, and it works in all solid cancers. So we can, do all the early clinical development and very high unmet need indications with short survival. And so we can get to approval based on survival measures like progression-free survival and overall survival. And while we're getting to approvals based on survival, we can be validating all these other assessment methods and then use those for accelerated approvals based on response rates in indications that are slower to kill people. So, there's good paths forward, but I would say, as far as the risks from an investment perspective. You don't know exactly how long it's going to take to sort out those issues, so you can have, development delays, and I would say that's, probably top of mind in a lot of investors. And then just people always worry biology is complex. Could there be some other explanation besides killing tumor cells for this kind of pattern? And so we have to prove everything. But once it's working, so I haven't shown this, but in these patients, uh, 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 5 of them are still alive today. The one who died just happened to have an extremely large tumor burden and couldn't tolerate turning all his tumors to scars. But all of these others are still alive, and which is longer than expected. So I think once we start proving a survival benefit, uh, I think this drug will move very quickly. So
That's kind of the end of our time. Probably we need to move on. So we do have a question from JJ Risha. I think he's asking about the exit valuation. So this is I'll make an email introduction so you can explain more about it. Now moving to the next presenter. Thank you, Paul, for the presentation. Now we have Aether.
Can you hear me?
Yeah, we hear you. Yeah.
Okay, good. Well, let's get started then. Okay, so thanks for having us today. I'm joined with our Chief Medical Officer, Bruce Imbert, who's also on the phone to handle some Q&A if needed. We're a clinical stage biotech company working in the pain and addiction area. We've got a fairly novel approach. So everyone's familiar, of course, with the opioid crisis. It continues to persist in spite of the efforts to arrest it. And that's primarily because if you're going to treat severe pain, particularly chronic severe pain, there really are no alternatives that provide the analgesic benefit of an opioid, unfortunately. And so as a result, you got the risk of addiction. These doctors are continuing to make trade-offs between, safety and managing pain relief of their patients. Additionally, there's about 30,000 babies born every year addicted to opioids, and there is no real treatment for them other than to wean them in the NICU. So our solution to this is a novel compound that binds the mu-opioid receptor to basically take the sting out of opioids. So this compound modulates that receptor to reverse it from its prodependent state back to its normal state without blocking analgesia. So in effect, what we're doing is suppressing the dependent signals from an opioid without blocking the analgesic function. And so if you follow this field, there's been a lot of attempts to do this over the last 20 years. However, folks were just fundamentally targeting the wrong biology. So our scientific founder published a few years ago exactly how, at the molecular level, opioids are actually driving dependence, and he went about drugging that biology, and that's what we're doing. And the addressable market spans multiple indications in excess of $40 billion. So we've got a unique approach. We've got a very simple target product profile for our pain indication, which is opioid equivalent analgesia without the risk of addiction. There's been significant pharma interest in non-addictive pain drugs recently, as well as interest from the FDA. We've completed 2 human safety studies with a prior formulation, tox in 2 species, which is clean, and a battery of non-clinical evidence in models that we think are relatively predictive of the human condition. We've got a very capital efficient plan. We're going to invest $10 million into 2 studies that basically, if they read out positively, would translate into a clinical proof of concept that targets about a 10x return for our investors within about 2.5 years, based on deals done in the non-addictive pain space in the last 15 months. So this $10 million financing is in the form of a convertible note, $13.3 million pre-money, 25% discount. We got a lead investor in for $4.5 million. We got $7 million total committed as of last Friday. We've been through due diligence with a number of teams. Most recently, the Keiretsu Forum, Northwest, and Ecosystem VG Group completed about a 6-week deep dive process. There's a 60-page report available non-confidentially. 4 of the 5 due diligence team members from that investment group participated in the deal after completing that process. Our team is quite experienced at drug development and getting exits for investors in the biotech world. So Rick Hawkins, one of our co-founders, is a serial entrepreneur with multiple exits. I spent about 20 years doing structuring and negotiating deals in biopharma companies and as an advisor to biopharma companies in California, and more recently have been C-level executive for two publicly traded biotech companies. Bruce Imbert is our very capable chief medical officer with a history of successful registrations and programs that he's led in the addiction field. Wolfgang is the brains behind this discovery. He's a preeminent researcher out of UCSF and Ohio State, and Lawrence Knorr is our very capable chief operating officer. So if you follow the field at all, everyone's trying to get away from opioids. Unfortunately, the replace opioid strategy just has fundamentally not really worked. There are some interesting compounds being developed. Here on the right, you've got Journavax, which recently got launched. It's a sodium channel inhibitor, which is a fairly hot target right now. But unfortunately, all of these drugs, including the sodium channel inhibitors, basically are compromising some level of efficacy for better safety. So in other words, none of these are achieving the equivalent analgesic benefit that opioids provides. But of course, opioids have the lousiest safety profile, as illustrated here on this 2x2. We're the only TPP in development that's going after opioid equivalent analgesia without the risk of dependence. No other TPP in development or on the market can claim that that's the TPP they're going after. And as you see here on the left, 60% of severe chronic pain patients actually are not getting treated with opioids. They're trying to manage their pain elsewhere. And as a result, the addressable market is about $23 billion, including the non-treated, at the generic price point. So a small premium, would double that pretty easily. So from an investor perspective, we're going to raise the $10 million at the $13.3 million pre-money. We're going to go make a batch of GMP material. The manufacturing process is already characterized. We're going to go do these studies in Australia. We've already got relationships with the CROs and the investigators. So we're looking to we will generate, I can say that definitively, US quality data in Australia based on the folks that we're talking to and the design of the study. If we get a positive readout being defined as a change from baseline in patients that are on chronic opioid therapy, independent scores without a change in their analgesic scores. And these will be clinically validated tools that we're using for these assessments. 4 weeks of treatment, 52 patients. And if that reads out positively, we'll have a proof of concept that benchmarks conservatively at about a 10x return, and we'll be looking for an exit at that point. If we don't get the exit, we're not looking at a series of never-ending dilutions for our investors. We can go straight into a registrational study for the pediatric orphan indication, which would be PRV eligible. The last PRV sold for $200 million just a few weeks ago. I think there's a good chance, better than good chance, that if this reads out positively, there'll be a lot of pharma interest. First of all, there's already a lot of pharma interest in our TPP. We've got to prove it out because what we're doing is quite novel, of course. On the left side, you kind of see the different ponds we can go fishing in. There's quite a few different ones, given that we have a pipeline and a product. $300 billion of revenue is at risk the next 6 years due to patent expiries and big pharma. They can't solve this problem by picking up a $2 or $5 billion product. They need to pick up $10 to $20 billion plus products, and that's what they're looking to do. So our base case revenue assumption is about $20 billion, assuming a 2x price premium over generic opioids. The sodium channel inhibitor that just recently launched priced at 13 times generic opioid pricing. I don't think we need to do that with our drug, and their launch didn't go so well. So you can see here on the right, we're sitting back here on the far left of the evaluation continuum. The two most recent deals done in the non-addictive pain space, this Lilly takeout of Site 1 and the Latigo Series B, were done with basically phase 1 data and some hint of mechanism in humans and some safety data at a $300 million floor. We're looking to generate a level of human validation that exceeds what those assets had at the time of those deals with these studies. So we'll generate a clinical proof of concept, as I mentioned. defined as opioid equivalent analgesia without the risk of dependence, which is what we want to go after. And this proof of concept will also support a treatment for opioid use disorder. We've got plenty of evidence, as I mentioned, 2 human IV safety studies, 28-day tox in 2 species. We've tested this now in 10 different models where we're seeing consistent and marked improvements in dependence and analgesia and related measures across 4 different species. In the interest of time, I'll skip the details, but basically we're going to do a phase 1 normal healthy SAD study in about 26 patients, and then a phase 2 in says 48 patients. I believe that should say 52 now. 52 subjects, patients that are on chronic opioid therapy to measure their dependence and analgesia, and effect of the therapy on analgesia. And then, of course, in Australia, you get 43 cents on the dollar back for every dollar you spend, which is quite nice, and it's a faster regulatory path. We have 5 patent families, 3 issued, 2 pending, covering indications, methods of treating pain, NOWs, and OUD, as well as formulations, which are composition of matter patents issued for pain, as well as pending new applications for pain, in addition to orphan exclusivity for the NOWs indication, which of course is 7.5 years in US and Asia and 12 years in Europe. And then, like any good biotech company, we'll continue to build a patent estate as we go. So in summary, I think we have a relatively de-risked opportunity here. When you think about how biotech companies typically fail, you don't want to fail safety or tox right out of the gate. I don't think that's a concern here. We've got plenty of evidence support that this is likely going to work in humans the way it works in animals, not just from our studies, but also externally peer-reviewed validation of our mechanism from other publications and other investigators. We got a seasoned team of drug developers. We've completed initial feasibility in Australia with the investigators in our CRO. We know that the patients are there and that we can enroll these studies. And we have a phase 2 study that basically is designed to provide a proof of concept for a first-in-class TPP in a market that's strategically important. $13.3 million pre-money. I think if you're an investor, you should think about this pediatric orphan indication as kind of a valuation floor. If for some reason the adult indication takes longer, or we don't get the exit right away, then I think we basically have a floor of a $1.5 billion addressable market with a $200 million PRV with very low risk. Okay, thank you.
Thank you for that. So yeah, time for the Q&A.
Is this a drug that is a cure, or is this a drug that, how long would someone be on this drug?
Well, it depends on what they're taking it for. So it's a pipeline and a product, first of all. So we're a small biotech. We got to focus. We're focusing on proving it out in combination with an opioid. Okay. So if you look at the unmet need for pain management right now, the significant unmet need is severe chronic pain. So the ultimate commercial presentation will be our compound co-formulated with an opioid as a new chemical entity, as basically a second generation opioid, if you will. So they would be on it so long as they're managing pain.
Thank you.
All right. And then we have a question from Dan. Dan, go ahead.
Thank you. Very interesting. So coming back to the pediatric aspect of it, and the fact that in that case it would not already be a combination. You'd be looking at an affected child, probably prenatal or preemie or what have you, and you'd have to match it up with them. So it begs the question as to where are you on likely reimbursement for something like that?
Oh, yeah, this is a great reimbursement story, and then I'll let Bruce chime in. So right now, the standard of care for these babies born addicted to opioids is they get separated from their mom right away, go straight in the NICU, and they go through a weaning protocol where basically they're tapering down a dose of opioids from birth until they can get released from the NICU, typically 2 to 4 weeks, depending on severity. So this is why it's such a low-risk project. Our clinical endpoint would just simply be reducing the weaning time, reducing release time in the NICU. So you think about, $1,500 a day in the NICU. You shave a week or two off of that. You share half of that with Medicaid, and the other half you keep, and that's your price. So it's a very compelling reimbursement story. Bruce, anything to add? He might be on mute. Okay, keep going.
No, I guess it's really proof of concept, but yeah, you can do it.
Yep.
Sorry. Sorry,
Dan,
maybe you did it.
Dan, did that answer your question?
Yes, yes, and
Yeah, what I
it's
said,
very
was it
exciting to think
stable?
of that.
Wonderful. Yeah.
Thank you.
Yeah, sure. Any more questions here? Joya, want to say something?
Nope.
All right, cool. All right. So feel free to drop your questions if you have any, and then I will make an introductions anyway. Thank you so much for the presentation. Now we move on to the last presenter of the day.
Yeah, sorry I had to step out there for a few minutes, guys, but I'd like to go through and ask the investors who they're interested to learn more about. If you have your camera on, I'll just ask you and you just tell us. If you have your camera off, please just put that in the chat box. Let's start with Julia. Who would you like to learn more about, if any?
Well, I imagine my network could potentially be interested in the last presentation by Dr. Barislanda.
Nolius? Okay, we'll make an introduction and we'll see where that goes in that case. Marome, how about you?
Yeah, I would say Nolius as well.
All right, great. Dan, how about you?
Well, obviously, I'm interested in the three health ones. They're all really interesting. Some are further along than others, but I can definitely see Chiefs fitting in with them. Thank you.
Okay. All right. Sounds good. We'll make introductions to all three of those. And with that, let's go to Leanne.
Yeah, so I'm not an investor, but a technology developer in the healthcare space, interested in pediatrics. So I actually had an interest, though, in just learning more about Aether and the opioid, since they mentioned a pediatric indication.
Understood. And with that, let's go to the next one. We have Per. How about you?
I think I'm in the software industry, so I think Eric, it could be interesting to open up a dialogue with Eric, since the devices were working in Europe.
Yeah.
Which one? Chillshark or
Eric,
Eric?
the guy with the antennas.
Oh, okay. Yeah, Skymir. Okay, great.
Okay.
Next is Francisco. What do you think there? Oh, you put it in the chat box is fine. With that, I think we next have Patrick O'Neill.
Yes, I'd like to follow up with Nolius, please.
Right, we'll do that. And with that, let's go to David. I think you've already met some of these, but are there any others?
Yeah,
you'd like to
I
meet?
met some of them. The additional one would be let me take a bite on Chill Shark.
Chill Shark. Okay. Got to get that cold plunge. Huh. All right. We'll do that. And I think that's everybody that has their camera on. If you have your camera off, you're welcome to put that in the chat box. We'll be able to make an introduction with that as well. Appreciate everybody taking time to join us today and great presentations for everybody going around. With that, we'll go and wrap up and close out for today. Any closing words from your side, Mo?
No, I did truly enjoy the session today, and thanks so much for all the presentations and for good questions. Although it's midnight my time, but I'm kind of enjoying it. So.
Okay, great. Well, I want to thank everybody, and many of you I need to catch back up with, Marome, Leanne, and others. We'll be trying to find the time to get back together. With that, we'll let you guys go, and we'll see you next time. Thanks so much.
Okay. Thanks a lot.
Thanks.
Bye.
Thank you.
Thanks. Bye-bye.
Thanks.
Yeah,
Great
bye.
presentations.
Thank you.